So what we're going to do in the next hour is, remember, we just talked about the fact that not all companies in the stock market are investable because some of them are doing bad, some of them are not making money. So the objective here is to define what is a good company, okay? So in the next hour, I'm going to show you what is my definition of a good company. And then we're going to go and look at some websites which are free. I'll send it to you in an email, what websites I looked at. And I'm also going to give you a free screener whereby you can very quickly take the 6,000 and get them to a list of 20. Would you like that? Would that be good? Okay, good. So that's the objective in an hour. Okay? So the three main markets, NASDAQ, S&P 500, and Dow Jones. The SPY is the ETF or exchange traded fund of that basket of 500 people, 500 companies, okay? Dow Jones about 30, they call it industrials, but they're not industrials anymore. Anyway, so these are the three. There's a very big difference between the trader mentality, the one who day trades, and the investor, which we're all investors. So the trader has always a very short time horizon. He wants to buy today to make a profit tomorrow or after 10 minutes. The investor has a long term. What is the advantages? I showed you a graph today about the advantages of having a long view. Do you remember that graph? Remember the graph? Yeah, that says the more you're invested, the lower probability you're going to make money. Lower probability you're going to lose money. The key focus is managing quick reactive decisions. They are so obsessed with the news. Look what happened, the market went up, went down. For somebody who, like, think of it this way. Looking at your son, you know your son is going to grow through the years, right? You're not really weighing your son every day. It's ridiculous, right? Right? You're just nurturing him. You are trying to support him, and you know he's going to grow in 10 years, right? You don't have to weigh him every day or be worried that his weight today is the same as yesterday. Didn't grow, right? That's the trader mentality. Investor, we know we're not picking good sons, but we're picking good companies, and we trust that we take them. Emotions, there's a lot of fear and greed. They're always hyper. They're always on steroids, the day traders. Here, it's patience, it's boring, it's slow. These guys cannot help it by look at the screen all day. These guys, they don't care. The maximum I do is 10 minutes. I'll confess, in the beginning it was like a video game for me. I looked much more, but right now it's 10 minutes. That's all what I need. It's more than enough. In market downturns, they are very anxious. Here, they're confident. They know the market will go up. There is no scenario, there is no situation whereby the market went down and did not come up to a higher high. Are you following what I'm saying? It never happened. So if you're having a long-term view, you don't care. You don't care. So it's as if somebody, if it starts crying, starts raining, they start crying. It's going to stop raining, you guys. You know what I'm saying? So if it rained today, at some point it's going to stop raining. But the day trader, when it rains or the market goes down, they start really being anxious and doing something stupid like selling good stocks and stuff. So what is a stock?